The chief investment officer of Morgan Stanley just came out and said, Wall Street has used a 60-40 rule for the last 50 years. 60% stock, 40% bonds, retire wealthy. Okay, well, he said, listen, half of that portfolio is broken. Sell half your bonds and put it into metals. He's saying 60-20-20. Michael Hartnett, the chief analyst for Bank of America, who has a very, very expensive newsletter that goes to the institutionals, he says, no, 25%. Jeffrey Gundlach, the bond king, who's made his life selling bonds, said, no, 25% is not overweight. So if 5% would be a tenfold increase, how about listening to the chief investment officer of one of the biggest banks in the world, Morgan Stanley, who says 20, or Michael Hartnett 25, or Jeffrey Gundlach says that's undervalued, or not overvalued, not overweighted. There'll be nothing left overnight. And I say that I don't care if people think I'm talking my book. At this stage, after 36 years, I don't need to talk my book. And all the interviews I do in my own YouTube channel, I'm not going to destroy my name, that of my family, and my company's name by saying anything that I don't believe in my soul. And I will tell you, there isn't enough to go around. There's far more money than there is money substitutes like gold and silver to put it into. If I had to guess, it's the Exchange Stabilization Fund, in other words, the U.S. Treasury, who can do so in a clandestine manner without asking for congressional approval. It's about national security. How do they frame critical minerals? National security. So they bring it all in, they buy it all up, and they don't have to talk about it. And the bigger question is, why don't we hear about it? Forget about who it is. How about why? Where's the mainstream? Where's the Jim Cramers, these people who pretend to be looking out for our best interests? And he said gold and silver, the top was in months ago. And what do you know? We are way higher. And I've never sold gold and silver for people to become wealthy. I sell it because it is wealth that has outlived 2 world wars, German hyperinflation, the Great Depression, every pandemic, everything. And the system about the dollar, since 1971, it's been about trust. We severed the gold standard. We're no longer redeemable in gold the way we were prior to that. And who trusts the United States anymore, whether it be institutions? And I'm a patriot. I thank God every day I was born in the United States. And I would vote for President Trump again. I thank God he's there. But who trusts us? Our institutions, the judicial system, the federal government, immigration, you name it. Who trusts these things? Who trusts our fiscal responsibility? We are creating $1 trillion in debt every 100 days. 1 trillion seconds ago was 31,688 years ago. So we pretend to be the policeman of the world, right? And military spending, which they've now increased to 1.5 trillion, is discretional. And the Congressional Budget Office said by 2031, 100% of tax revenue will go just to pay the mandatory entitlements and the interest on the debt. And those entitlements are off balance sheet, which means when you fund your military, you're doing so by selling bonds. You're borrowing money from the world to go around and police them. We are at the late stages of a system and empire based on trust, which has squandered the trust not only through weaponizing the dollar and the treasury against countries like Russia, not only through the previous administration, when you look and say, this is too stupid to be stupid, where everything that Americans were proud of, like coming to the country, all of us came from another country, our heirs did, where is there a two-tiered justice system? Are the elections fair or not? All of these things, whether or not you think they are, half the world thinks that they're not. And all of these things have eroded the trust in this nation. And so now it's going from lack of trust. Look, I'll say it this way. After World War II, the United States stood on a very high moral high ground. And I would argue we've trampled on it, not only through fiscal irresponsibility, but through our actions at home and abroad. And that is not sustainable for a country who not only is running wicked fiscal deficits every year and a debt that is compounding exponentially, where the interest on the debt is more than your defense spending, which has to be borrowed. I would just simply say we are seeing a transition where gold and silver are being reintegrated into the monetary system as a symbol of trust. And this will become a marriage between blockchain transparency and physical commodities. And it's happening. It's real. Problem is most people don't get it because the mainstream media doesn't talk about it. You do and have for years. And be honest with me, Charlotte. I'm going to ask you a question. You know, your friends who you've known forever, who know what you do, when you tell them this stuff, do they give you a blank stare? Do they say to you, what? Gold, silver, mining shares? Can you have a conversation with your oldest friends for more than 3 minutes about this stuff? You don't have to answer. Your smile says it all. And I know because I've owned a company for 36 years. They don't get it. Now they're beginning to, and they're your friends, so they listen to you, that you're smart, but the same thing is true, is that this hasn't come full circle yet where people want to acknowledge just what gold and silver represent. They've been pet rocks for a long time, but they're not anymore. And the really smart money who is spending billions upon billions upon billions upon billions every single month, quietly, it's never happened before. And that, to me, is all you need to know. I've been coming to this conference I take that back. I've been coming to Vancouver for conferences for a very long time. And before I came to this one, I would come to the Agora conference, which became the Rule Symposium, which now has moved to Boca. But the Agora conference back here was a decade plus ago, and I would get up on stage, and I've always been way early. People probably think I'm full of crap for saying it, and that is that this market will be defined in two ways, and I'm proving to be right, I believe. One, it will be too expensive for most people. They'll say, geez, it's so expensive, I missed it. But for people watching this show, it will be more about the difficulty obtaining product reasonably and with any expediency whatsoever, because there's very little product out there in relation to the total amount of money out there. And we are the pimple on the elephant's rear end. The elephant has no idea, but we've been talking about it forever, so we think there's plenty of it out there, right? As Rick Rule, who was in here, I saw 2 interviews before me, he will tell you 0.5% allocation from precious metals and precious metals equities across the entire financial matrix from Joe and Jane Sixpack, as he always says, to the Harvard Endowment Fund. Well, guess what? The Harvard Endowment Fund just bought a couple $100 million in gold. When the public wakes up, it will be either too expensive or too hard to get the product. And I think that is how the market will be identified on a large scale. So it is a fair question. There's not enough to go around. And if that moved just to 5%, if Rick is right, that's a 10-fold increase in demand, Charlotte. How about 10%? And you know what's interesting? Wall Street never acquiesced to metals. And you get an advisor and say, fine, 5%, put 5% in. Well, the chief investment officer of Morgan Stanley just came out and said, Wall Street has used a 60-40 rule for the last 50 years. 60% stock, 40% bonds, retire wealthy. Okay, well, he said, listen, half of that portfolio is broken. Sell half your bonds and put it into metals. He's saying 60-20-20. Michael Hartnett, the chief analyst for Bank of America, who has a very, very expensive newsletter that goes to the institutionals, he says, no, 25%. Jeffrey Gundlach, the bond king, who's made his life selling bonds, said, no, 25% is not overweight. So if 5% would be a 10-fold increase, how about listening to the chief investment officer of one of the biggest banks in the world, Morgan Stanley, who says 20, or Michael Hartnett 25, or Jeffrey Gundlach says that's undervalued, or not overvalued, not overweighted. There'll be nothing left overnight. And I say that I don't care if people think I'm talking my book. At this stage, after 36 years, I don't need to talk my book. And all the interviews I do in my own YouTube channel, I'm not going to destroy my name, that of my family, and my company's name by saying anything that I don't believe in my soul. And I will tell you, there isn't enough to go around. There's far more money than there is money substitutes like gold and silver to put it into. There's a $12, and it's growing, an arbitrage in China. Yeah. Shanghai is offering $12 an ounce more, thereabouts, per ounce than silver. For silver than we see it in the West. So if you're a trader, you can, if I give them 10 million ounces of silver, buy paper here and deliver it in Shanghai, that's $120 million. Done. That's what they're doing. And that arbitrage is that sucking sound, if you listen. That's their way of saying, be dumb enough, please. We're sitting on all of your dollars through the trade imbalance. Please be dumb enough to give us your silver, and we'll pay you handsomely for it in your dollars that have the retaining value of a melting ice cube, where they're continuously losing value through irresponsible fiscal policy. And so you have, for example, China right now is expanding their Shanghai Metals Exchange throughout the entire Belt Road Initiative, using local currencies, all these nations trading over Enbridge or SIPS, the Cross Interbank Payment System, both of which are not compatible with SWIFT. And they're settling imbalances in gold. Now think about this. China just signed up the ASEAN nations. These are the countries in Southeast Asia who represent China's largest trading partner by far. There's 800 million people there, twice the population of the US, 30+% of GDP. They're now signed up to SIPS and Enbridge, which means all of the trading won't go through SWIFT. It'll go over other channels that SWIFT isn't compatible with in their local currencies. And imbalances are settled in gold. In other words, instead of when it had to be dollars, well, that supports the dollar strength, right? And when you have all these dollars to conduct trade, you put the reserves, instead of leaving them earning nothing, you put them into treasuries, which are very liquid, which give you a return. So that supported and kept rates low and kept asset prices high, right, in the US. So what if they say, well, we don't need dollars anymore, we trade our own currency, building our monetary system instead of that of the United States, better be smart about it. And then instead of holding treasuries to put reserves in, we put it into gold, which has doubled the performance of the treasury for 25 years. Look at the last two. 2024, gold was up 40%, the dollar or the 10-year treasury up 4.5%. Last year, 10-year treasury up 4, gold up 80. The point of it is that it can't be weaponized, can't be taken from you. It's outperforming it, has no counterparty liability. And these countries have had it with the U.S. and our monetary policy being at the end of the barrel of a gun instead of cooperation. And that's what the BRICS are. It's all voluntary. The Shanghai Cooperation Organization, all of these countries are doing so because they see a way away from the hegemony of the United States and their safety in numbers, and it's happening. It's growing. And you're right. That's what started the ball rolling. In every interview I've done with you for the past 5 years, we've talked about BRICS and we've talked about the international demand. And through all of that time, it's never spilled over to the U.S. until now. For the last 15, 16 months since he won the election, Trump, honest to God, Charlotte, the amount of gold and silver coming into COMEX is like, honestly, it's 4 feet of snow in Death Valley. And you're not going to see snowmobile dealerships spring up in Death Valley if that's the case. It's an anomaly. Or is it? Is all this being reshored? We thought it was tariffs. I said, no, it's not tariffs. It's reshoring. It's reshoring. They're lying to the other banks. It's the only way to get it back. These banks have been in collusion with each other for 50 years, and the primary way they would do it is they would short in New York, which would drive the price down, and then take a corresponding long position in London, which doesn't affect the price but makes their books neutral. And they would trade back and forth either with real metal or what's called warrants. I own it, no, you own it. No, I own it, you own it. Just a piece of paper that showed ownership. And they would never really, it was capping the price. And now Trump comes in and they say, it's tariffs, it's tariffs, it's tariffs. Send the metal back. We need to cover it. Don't worry, it's just one way it'll come back. It's not going back. They are reshoring. We've become a net importer of gold. We've been a net exporter for 50 years. And whoever is bringing in record after month, record every month, huge amounts, billions and billions and billions. I will just simply say, if you have billions and billions and billions and billions of dollars, you are also very, very well connected. And they know where this is going, or they wouldn't waste their time, their money, or do things that are completely non-conventional. Or are they? Are things just changing? And I would argue they are.